If you bought one of these thinking it was a good investment property, I'm sorry, but the odds are you were conned. Hi, it's Nero here from Investment Rise, and I want to talk about the big dangers of this so-called investment property type. I see so many people going out there to buy this kind of property. Maybe it's because they already have a home in Sydney, Melbourne and Brisbane with a significant mortgage, and they know they need to invest, but they can't afford another house. So what do they go and do? They go and buy a dreaded apartment. And why are units, especially high-rise tower units, such a bad investment? Well, let's have a look at some of the reasons. Number one, the vacancy issue. Right, with so many apartments having been built in Sydney, Melbourne and Brisbane over the last few years, we know there's some massive oversupply issues. Sydney, for example, has the biggest oversupply issue right now in recorded history. Melbourne, the vacancy rate is one of the biggest concerns across the country. All right, Brisbane unit market, forget about it from a vacancy perspective, right? It is so hard to find tenants. So if you buy an investment property because you want something that's more affordable, but then you end up buying something that you struggle to get rented, what's that going to do for your cash flow? What's that going to do for your ability to achieve your financial goals and maintain a certain lifestyle? Everything's going to go pear-shaped. And so that's why I think buying an apartment at the moment, it's a really dodgy investment, especially those high-rise towers, okay? So ignoring even just the vacancy rate, I mean, we also know that so many of them are having all kinds of structural issues right now, and if you get caught up in that, that can cost you an absolute bomb. So you've got vacancy rates, you've got the fact that there's structural issues, but then the other thing, what happens if you don't have any of those things? What if you do get an apartment and it's all built correctly? Yes, it's in a high-rise tower and it gets rented, but then your cash flow still goes pear-shaped because you've got to pay all those high strata costs or body corporate fees, right? I can't tell you the number of people who bought a unit maybe in a high-rise tower somewhere, and initially the cash flow seemed good because they bought it for so-called higher rental yields, and they thought, oh, because I'm going to get a higher rental yield from having a unit, but they didn't take into account the fact that the body corporate fees. Now, even though they made it understood that yes, the units have body corporate fees, what they didn't take into consideration was the fact that body corporate fees often increase, and the rate of increase on body corporate fees far outweighs the rate of increase in rent, especially when you consider rents are falling in many parts of Sydney, Melbourne and Brisbane in the unit market. So your cash flow also goes pear-shaped. But then let's say you can handle all that. The other major issue is the fact that the capital growth has not been there, or has not been anywhere near as good when it comes to units. For example, we know that Propertyology, one of the major research companies when it comes to property, did a lot of research on the price movements in houses versus units, and this is what they found. So if we look at Sydney, from 2009 to about mid-2019, so over a 10-year period, Sydney house prices went up 100%. Now, yes, 65% of that happened in just a 4.5-year period, ending in mid-2017 or July 2017, yes. However, over 10 years, it was 100% growth in the house market. So you think, well, what about the unit? Sure, that would have done somewhere near as well. No, over a 10-year period. There were many suburbs, such as in Ryde or Strathfield South or even Kalara, where units only went up about a third of that. It means the average investor missed out on 2/3 of capital growth, okay? And then when you add in all the other issues that I just mentioned, someone buying a unit is probably going, this property investing thing doesn't work. And it's not that property investing doesn't work, it's just that someone went and bought the wrong type of property. But what about Melbourne market, for example? Well, again, over a 10-year period to ending mid-2019, house prices in Melbourne went up 91%. But CoreLogic reports that the Melbourne unit market is often right now the worst in the country, with some of the unit markets, prices rising only about, over 10 years, only rising about 3% over 10 years, all the way up to maybe about 30%, 35%. Again, it's only about a third in terms of the capital growth. So people are missing out big time when you're focusing on getting into the unit market. Okay, suburbs, especially like Docklands and Abbotsford and Baldwin, have had massive differences between the rate of growth of units versus the rate of growth of houses. And if you've been following any of our past videos, you know that we say stick to houses. That's where you want to buy anything with land on it. Even if you have to buy a townhouse, buy something with land on it. I know so many of our competitors out there will say, oh look, they're just trying to flog off the plan units or whatever else, but we have always maintained that if you want to buy an investment property, buy something that you can afford, but make sure it's got a land component. Even if that means you've got to go outside the city you live in, I believe you're still going to do better than trying to buy a unit maybe somewhere close to you where you live just because you think you can afford it, because there are so many other concerns. And in Brisbane, well, the unit market in some suburbs actually declined in value. I recently met someone who was told by someone else that they should buy lots of units in Brisbane because the Brisbane market is going to take off and that the unit market is very cheap, so they can buy a lot. And they bought, I think, 4 units. 4, because they had the equity and the cash flow to do that. Yet 3 years later, when they valued the units, every single unit was worth anywhere from $30,000 to $70,000 less than they paid for it. It's a scary proposition, right? And so that couple had gone from being in a really good position to now not knowing what to do. Okay, so if someone is currently out there telling you, if you're taking advice from someone saying buy a unit in a high-rise tower, they're either blindly naive or they're just trying to con you. Stay away from this high-rise unit market. I've just given you 4 very powerful reasons why I think anyone who buys a high-rise apartment right now as an investment property is more likely to struggle financially. It's not the right way to go. Stick to something with land on it, even if it means going outside of where you live. Stick to capital cities, and I think you'll still do far better from a capital growth perspective and a rental perspective as well. Hey, thanks so much for watching. If you found this video valuable and you're thinking you might like my help to help you find an investment property, then head on over to NiroCall.com. That's Niro, N-I-R-O, NiroCall.com to discover our unique 5-step process that's helped my private client group purchase now well over $66.2 million worth of property. And then if you like what you see, you can book in for a free half-hour phone consult with me personally. Either way, thanks again for watching.